Hey, are you a business owner, entrepreneur, or professional? If so, we want you to apply to be a featured guest on our show. My name is Adam Torres, and I host the Mission Matters series of podcasts. I've recorded over 3,000 episodes, and we are just getting started. How do you know if you'd be a good guest to be on the show? Well, only one way to find out, and that's to apply, but I'm going to let you in on a little secret. We want guests that have a story to tell, guests with a brand, a product, or a service that can benefit my audience of listeners. If this sounds like you, go to missionmatters.com and click on Be Our Guest to apply. I'd love to talk to you and get to know more about your story. Again, head on over to missionmatters.com and click on Be Our Guest to apply. All right, now let's get into the show.
Our company is called Mission Matters. We're a multimedia company focused on the needs of entrepreneurs, business owners, executives. Our goal is to amplify their mission and purpose in regards to what they're doing to educate and inspire future generations and other folks that are in the trenches. And so besides being a media brand, we've interviewed over 3,500 people on our podcast. Adam's actually interviewed most of them, or all of them rather, and in the last 3 years. So we've built up an entire podcasting division. We also have an entire book publishing division in our company as well. John, you want to go for it?
My name is John Paniagua. I work full-time at the New York Stock Exchange in the regulation technology area. But I've also, the past year, I started a multifamily syndication business, and I've joint partnered with other GPs on 3 deals. It's funny, Benjamin, same area, southeast New York, U.S., in the Hampton Bay area in Virginia, and another one, Savannah, Georgia. So, and I'm looking for more deals. Being a part GP, it's a lot of time. I've noticed it's a lot of time on my hands that I have to deal with in addition to working full time. I eventually want to leave working full time. But what I find right now, what I'm doing, and I'm looking to raise capital. I'm in the process right now of creating a fund because I know there's a lot of money in New York that's leaving. And they're going to areas like the Southeast, the Midwest, and Southwest, multi-family deals. I think people have had it with New York, and people that I'm seeing here, pricing of the assets here in New York. So I want to take advantage of that, and I think I can scale out better being on the LP side, the fund side, and then just see if I can network with other sponsors to find really, really good deals. One thing I've noticed the cap rates are being compressed now in the Southeast. I know there's still deals to be found, but I just got rid of a couple of ridiculous. It looks like that money's beginning to raise prices elsewhere. Anyway, that's the multifamily side, but also building an RIA and also still working at the exchange. I hope to leave that soon.
And then we've also got Jorge here. I guess, Jorge, if you want to introduce yourself.
Yes, thank you, Chirag. My name is Jorge Rabas. I'm located in Los Angeles. And the reason I'm having by the first books with Chirag and Adam is because I am the financial protection. How people protect their assets with property and casualties.
Cool. Awesome. I guess we're just still waiting for a couple folks to come in, but I brought in some other people from the audience to just join us. I guess, Daniel, do you want to introduce yourself?
Yeah, I recommend you hook up with this guy. He's a good dude, all right? But anyway, listen, I got into commercial real estate this past year as an LP and as a GP investor, and I'm here to network. I took our family investments in the apartment space from 0 to 1,500 units in 12 months, and I want to keep on expanding on that. And like I said, there's a couple of deals that very impressed with Ben. I know one day I'll be jumping on a deal with him, but I'm just here to network. We invest across the Southeast, Texas, Florida, Georgia. We're looking at deals in North Carolina right now. Our family's from Chicago. We don't invest $1 in Chicago. I have no plans to invest in the state. But no, I'm just here to learn, to network, and to find more deals as an LP and as a GP investor.
That's great. I appreciate that shout out, Daniel. I'll try to live up to that.
Awesome. Cool. I guess, Ben, do you want to introduce yourself?
Sure, thanks. So pretty new to this forum, really interested in it. Clubhouse for last week, and see great opportunity for like-minded professionals in the real estate space to really connect. So I work in the data and valuation space. We're connected to one of the largest real estate databases in the U.S. with 23 million property records. Just to kind of give comparison, CoStar only follows just over 7 million properties that really stick to the institutional grade assets, and they average around 250 lines of data. Our data partner, we've got 23 million commercial property assets within our database, averaging 1,800 lines of data. And what we're focused on in partnership with them is really bringing real estate analysis to everyone. So, out of the 23 million properties, 16 million are really the non-institutional guys who don't know how to access information without going through a broker or without hiring a full-blown valuation. And so we do have a traditional valuation company that's tied directly to this database. The major opportunity that we've been able to get from this collaboration with the data company, average valuation, say, of an office building takes 20 to 25 hours to write. Traditionally, with other valuation writing tools there, you bring that down to 12 to 15 hours. With our database tied directly to our writing tools, we're in and out of an appraisal anywhere from 45 minutes to 3 hours, not including site inspections, because we're tied directly to data that everyone's going to all these third-party sites, having to do all the copy-paste, do Excel to Word programming, and we're all integrated within one platform. And so we're launching a new company that's focused on evaluations and restricted appraisals for the financial market and for institutional investors, specifically for the institutional investors, making those valuation requirements more affordable, more timely. And then what we're really excited about is that there is million property owners, that John Smith, MD, who owns his office condominium, or any other person that owns a couple investments here and there because they found it as a way for tax savings, giving them the opportunity to get access to their to property value analysis without hiring a $2,500 valuation or without having to convince a broker that they're going to invest in them and do a broker opinion value. So we're launching the first subscription-based product in the market for product valuation. We're launching somewhere around $400 to $500 on an annual basis for quarterly updates on range of value analysis out of the 23 million properties across the U.S. We'll be able to provide that service probably around 18 million properties. That's what we're doing. Pretty excited about what we're launching.
Nice.
Awesome. Thanks so much for sharing that. And then I guess next up, I'll have John, if you want to introduce yourself.
Hey, everybody. Great to be back on this forum. Real Estate Contributors in Adam's last book, or the first book, I guess it was. I'm an attorney by trade, but a lover of real estate. Over my real estate experience, I've invested in many different asset classes, but right now I'm most interested in multifamily, and I just left California in November, even though my law firm is still there. I left California in November to come to San Antonio and see if I can pick up some multifamily here, and that's pretty much it.
Awesome. Well, cool. Why don't we get this officially started? So I think we've got many of our panelists here. I think we're going to have a few others joining in just a moment. And so Ben, John, Jorge was on just a moment ago. And I guess we have two Johns here. So John Fagerholm and John Paniagua, along with, of course, we have two Bens as well. So Ben and Mon, all of them are authors in our prior books. We've officially published 2 real estate books. We're working on a 3rd volume in that series right now. And we've had a lot of folks, gain a lot of value from these different books and opportunities that we've created. And so what we've done is every Thursday we put together a panel discussion. It just so happens that ours today is focused on real estate. We published over 150 authors, different types of books too, even like business leadership books. We've done a few diversity and inclusion books too. And so every Thursday we're going to have another topic. And so this week we really wanted to focus on real estate, especially just getting into the industry on how can you invest into real estate. Or if you're trying to enter the industry, we have a few experts here who've been doing this for many years who can provide a lot of their insights on how they can basically get started. And so from there, I'll pass it off to Adam just to kind of, maybe ask some basic questions just to get the conversation going.
All right. Looking for the mic, still getting acclimated to the clubhouse system, but I love this. And thank you, Chirag, for putting this together. Chirag has really been working hard to spearhead getting our platform and getting everyone on mission, on our authors on the platform, and just kind of building the community here. And we've been looking for different ways to really just connect everyone and get everybody to network and get to meet everybody. I mean, Chirag and I get to know everybody because we work on the day-to-day in publishing, and we're always in contact by email and other things, but we're trying to really, in terms of building the community, getting everybody else together. So that's why some of the names on here, when I see it, I'm like, Jorge, John, Ben, I'm like, man, this is awesome. Getting the whole gang back together. And Benjamin Edmond, I was like, man, I haven't talked to you in a while. I know you're a busy guy.
It feels like a reunion.
I was like, we got the band back together. So maybe this time around, and this is truly, so obviously I've interviewed quite a few people on here in terms of the podcast, but this is definitely not interview style. This is fireside chat style. This is everybody chime in and give their opinion. And this is not me like running this as a host or anything like that. I just want to make that clear. So I'll just throw it out there, maybe open up the floor, and I'll start with Benjamin Inman, since we haven't talked in quite some time. So what kind of things are you working on right now? Like, what's interesting to you? And again, that's a whole football field for you, but I just want to get the chat going.
Yeah, that's great. I appreciate that. You know, we're still actively buying in the market, even throughout 2020 last year, which I think threw most people a curveball. We still managed to close 3 properties last year, which, you know, I think is a success given the circumstances. But moving forward to today, we have another 288 units under contract in Jacksonville. At the moment, we're working on another 233 units in Jacksonville, just so we can finish building out our portfolio there. I have a property under contract in Dallas, Texas, and I'm going to look at a second property in Dallas tomorrow. So I'll be in Dallas all day tomorrow. Just a full day trip for me. So yeah, I mean, it's continuing to find things that make sense and take them down. I'd mentioned earlier that, you know, we have brought in property management in-house, so it's working out the kinks in that, because of course, you know, it comes with its own set of nuances. I've never wanted to be in the property management business, but, you know, we've just been through some property management companies that, you know, just at the end of the day, they're only as good as you let them be, because they're not going to watch the numbers, you know, any better than you will as an owner operator. You know, we're so hands-on that it just made sense for us to start bringing things in-house, because, you know, some of the things that we've been really good at is finding deals, operating deals, executing the business plan, and the asset management standpoint. But one thing that we, you know, started slipping in a little bit, which I did not like, but I'm not afraid to admit it, because, you know, you'll never become a jack of all trades. If you do, you know, you're bound to fail in something. But for us, you know, our third-party management company was just consistently late on getting us our monthly reports, which are due by the 15th of every month. Sometimes they would come in 2 days late, sometimes a week late, sometimes you had to ask for it. But what that means to us is we had to turn around that same information and get it out to our investors. And in the eyes of our investors, it looked like we were kind of, you know, not being consistent when, you know, our hands were kind of tied. So for us bringing property management in-house, it's more about controlling the timing of everything. It's not a profit center for us necessarily. It's just more about making sure that things are consistent each and every day. So that's really why we did that. But, you know, to John's point, John actually mentioned earlier that, you know, he was, you know, raising some capital in New York. And, you know, a lot of our capital comes out of New York, especially a lot of our debt. You know, finding a lot of guys in New York are a little bit more aggressive than, you know, people based in other parts of the country. You know, it's just the environment for that, especially the equity. I think you're spot on with knowing that, or realizing that there are people in New York that are looking for a flight to safety, not just in the asset type, but in the, you know, in the warmer climates. This is where they come to as snowbirds, you know, every year anyways. It's just, I think through COVID, it's kind of, they went ahead and advanced their plans that they were already going to execute on at some point in their life to relocate, especially to the Sunshine State. I think COVID just kind of amplified that, or really, I say amplified, I meant accelerated that plan for them sooner rather than later. You know, so, and I think you're right also about the cap rates compressing, because there's a lot of groups out there that are moving from retail to multifamily, and you know, all that new money in the Southeast. You know, the Southeast has been hot for quite some time, but I think in light of where everything is, it's going to keep compressing. But you are right, there are still deals out there. We're still finding good stuff. I mean, we're still finding things that are, you know, giving us an 18 to 20% IRR. Some of them are throwing off double-digit cash on cash from day one. Those deals are out there. I mean, they're hard to find, but they do exist. So I guess got a little bit off track there. But to your point, to your question, we're still active, man, and we'll stay active as long as we can. But at the end of the day, it's, I want to help people. There's some people that are just starting out, or some people that have, maybe like in John's case, he has access to money, but, may need access to some good deal flow. There's opportunities out there for everybody. And for us, it's, we had to raise $70 million over the past 3 years from friends and family, country club money, family office money. A lot of our capital comes out of Palm Beach on the equity side. It's a full-time job. And so now here we are 3.5 years in, taking some properties full cycle. And, now we have the institutions knocking on our door wanting to throw out some large equity checks, which makes our life a little bit easy. So, to everybody on here, to John, I guess there's two Johns. I guess I'll call him Texas John. Texas John just moved to San Antonio because he wants to get his feet wet. And I think that two markets that I'm very bullish on this year, I think, is Florida and Texas. I don't think that's a surprise to anyone on this call that those two markets are going to continue to grow. So, John, I think you'll find what you're looking for out there.
I hope so. My partner, who does all the underwriting, underwrites, I don't know how many deals per day, but quite a few. Quite haven't found something that fits the numbers yet here in San Antonio, but also looking at Brownsville. So Brownsville has some interesting statistics, and then the numbers are much better there. So I'll probably be taking a trip down there in about a week to look at a very specific property there. But I think that, I thought San Antonio was going to be a little hotter because most of the investments I've made have been multifamily investments that have been up in Dallas. So San Antonio hasn't quite panned out the way I want it to, but there's areas around, still in Texas that are driving distance that I'm looking at, and I'm really interested in up to 35 between San Antonio and Austin, but still
Takes time. You keep looking, you'll get there. On some of the outlier markets of some of these, like, outside of Dallas or Fort Worth, outside of Austin or San Antonio or Houston, you're going to find a lot of in-migration that's going to start taking place because of people from California, coming in and putting some downward pressure on the cap rates. People not wanting to deal with the traffic and the cost of living that will go up. You're going to start finding some of those people move further into the suburbs and even outside those suburbs. So I think you're going to start seeing a lot of those markets continue growing that are outside the major metropolitan areas. But you're not going to have as much competition on those deals from the institutions because the institutions are still looking at, your Phoenix and Charlotte, Nashville, Atlanta, because they're okay with a 12 or 13% return on their IRRs. But, the outlier markets, you're not going to have as much competition, plus you're going to have higher returns.
Yeah, I'm already starting to see that. I started coming here about 5 years ago and going up to 35, which for those of you that don't know, it's basically about an hour drive from downtown San Antonio to downtown Austin on the 35. And in between there's all these small little towns. And I've noticed that all of those small little towns are not as small as they were when I first started coming here about 5 years ago. And I think it's the Californians moving in and then the Texans taking that money and then moving out. Right, so moving out to the country, and my father-in-law has a house in Canyon Lake that he got relatively cheap with a lake view 10 years ago, and now there's nothing around that has even the acreage he has and anywhere near the price, because it's the people from San Antonio now going to this, buying lakefront property and lake view property with their California.
A quick question, because you mentioned Phoenix. I've been getting calls from some operators, some sponsors about doing the solar play with multifamily because I know over here in New York, I'm going to see if I can contact couple of the big players. Hopefully they return my calls because it looks like they're doing these social investments, for the climate change, things like that. So I'm getting a lot of calls about they're looking for funds because they're looking to do the solar play in multifamily. What are your thoughts on that?
This is Ben. If I could just chime in, of course, I think solar. Everybody's aware of what solar energy is, but the world is too dependent upon oil and gas that I think solar and wind energy, it's going to continue to be a buzzword for the next few years at least, I guess. But the end of the day, it's like it will take 2 lifetimes before solar energy green energy overtakes oil and gas, in my opinion, just because it's you're dealing with a lot of changes to take place before that becomes a strong foothold. But I think it can only be a good thing. I'm all about green energy, but I'm also realistic about the oil and gas industry as well. But I'm all about adapting and putting solar panels on the roofs of multifamily buildings, or even maybe if you have some extra acreage close by that you also own, maybe you can create a solar field of some type that powers the buildings. I don't know what the cost of retrofitting that would be. I think for it to make sense, you may need to get some grant money. I just don't know that the returns, because some of the tenants, they're not going to care if what their units are powered by. At the end of the day, on your B and C class, I would say, but maybe on your A class, you may get some millennials and some people that are more socially conscious, that they're renter by choice, not by necessity. I think that they'll probably get on board with it. I think the B and C class, if it makes sense, I'll be the first one to jump on board and give it a shot on the property. I just don't know what that return on investment would look like without grants in the picture.
Yeah, I think you hit it on the head, because I did some of the underwriting, and I saw the returns are definitely lower than if you didn't try to put the solar in it. So even from a tax, when you look at the tax benefits and tax, I think you're right. I think you're going to need some sort of a subsidy. But that said, I'm going to find out. I think there are some investors out there that are willing to pay for less returns. I need to do more research. So, which is interesting, because I got bombarded, with like, it was like 5, 6, 7 deals. One was in Tulsa, Oklahoma. Another was Oklahoma City, and the other one was in Phoenix. The other units. So, which is interesting. I just wanted to see what came across stuff like that.
Yeah, I think it's wide open for testing for sure. I just don't have any personal experience with it, but it is something I've thought about. I just know what I know, and I know how to find my deals and operate them, and that's I know my lane and I stick to it. But like I said, if it's something you want to further explore, I'm willing to have the conversation, because I believe in green energy, but it's just going to take some time to get it implemented, I guess.
Yeah. I agree. Yeah, I'll bounce some things off you. An idea of what's coming down the pipe.
Yeah. And John, I think Daniel's still on. I think he may have dropped off. I think he said he was around 1,300 units. So I was just going to see what he was seeing out in the market, and kind of what he was focused on. It looks like he dropped off. I will say too, and this is for John in New York, I think you're smart with taking advantage of the funds that you really have a lot of equity just swarming around you right now in that market. Money that's looking for a place to call home. So I think you're smart with finding some other sponsors to invest with. And I related to, there's a family office based down in Florida that has invested with me in quite a few deals. I just had a conversation with them today, but primarily they're one of the top Medicare billing physician families in the nation. So they're very well capitalized. They have an inflow of, cash coming from that, but they also raise money from other doctors. So the way that they do theirs is they'll come into a deal, our deal or anybody's deal, because they invest with other people as well. They'll put in a sizable chunk of equity as a co-GP, and of course the percentage that they get fluctuates deal by deal, but it's a trade-off. And I just literally had a conversation with them this morning, because one of these Jacksonville deals that we have in contract, they're going to put in $4 million of equity into that project, and I'm going to give them a slice of the promote for doing that, because the trade-off for me is it reduces the amount of time that I have to spend on the phone and in meetings, taking people to eat steak dinners and things like that. That it's just time consuming, and it's almost like, if you save me some time, I'm gonna reward you for it. So I think that you're smart for having that same approach, because I've had other people that have invested with us that have taken the same thing, and it just helps to diversify, because they invest in Arizona, Texas, Florida, Carolinas. I think they're smart for doing it that way. So, because it's at some point, we all know that not every deal wins. But I think if your underwriting is strong enough and you're confident about the overall deal itself and the metrics that it provides, then I think that, you have a good chance of winning. But, just like the stock market, if, one stock tanks, at least you have other investments that are going to, help keep the whole thing floating. So, I think you're smart for having that focus. Don't try to be, the next biggest and best operator out there. If you just focus on finding the right ones that you can trust, that's a big thing. It's just trusting the people you invest with.
I mean, that's interesting you said that, because that was exactly the approach I did when I started over a year ago. And, and I believe, I almost call it the Amazon distribution model, where you get a little piece. So I did that. I have a part GP. I got a percentage on 3 deals. They're each over 100 units. And it was a smart move, because I got to learn both the GP side, and I also invested, more money in there. So now I have both. I have the advantage from both sides. So I realized, I think the fun piece of it, the LP side, I think is where I really want to focus on this year. But building out a network, as many deals as I can, so whatever, just get a piece of it, whether it's GP or LP. I agree with you 100%. 100%. And that model worked. I was able to get 300 units last year. This year I want to focus on building out the network of contacts, until I can find deals, or like I said, I could network, with people like you, and continue finding deals and see if we can get deals together, offers together.
No, it sounds great. I think somebody else just joined on. That's me.
We got 2 Johns, 2 Bens. Yeah. Why not?
I know that John very well. John Paniagua is the man. So if anyone in here is thinking about working with John, I just hopped in here, but highly endorse John Paniagua. He's a sharp dude from Wall Street to real estate.
I don't know.
But no, I was just kind of blown away. I hopped out of another room and I was like, oh, I'll come in here. It's the first time I saw Adam Torres, his name pop up on here, and Adam's. We kind of built a relationship that way. And then the title of the room was like, how to get started in real estate. 2021, as soon as I come in, Eric Benjamin dropped, he said something about family offices. I'm like, hold on. Someone who's getting started in real estate, we got a room, we're talking about family offices. Like, what's going on here? So I sent you a request on Instagram, Benjamin. And and I just kind of dropped you a note there too, just saying how I was kind of caught off guard. But it's cool to see. I'm just going to say this, like, I think even a week, or definitely a month, but even a week ago, I feel like there was a certain level of sophistication that was lacking on this platform, to the level where it's just kind of like, if you want to get your bigger pockets fixed, you can come on Clubhouse. But now we're seeing guys like Benjamin and John on here, and Adam, I don't know if you realize you're putting this together, but I mean, like, we're just getting bigger players getting on the platform, I guess is what I'm starting to see. So cool to see this. And then, I don't know, Benjamin, I'm with ASIM Capital and another group, libertyfund.io. You can see it in my bio if you want to go ahead and check it out. John is, I don't even want to say mentee, because he's just gone above and beyond, but he did take a course that my partner and I teach. And I guess I'll pause and just say I'm happy. Thank you.
That's great. I appreciate that. What you say family office, and I want to kind of like piggyback on that, because it is a buzzword, right? It has been a buzzword for quite some time. But I think that a lot of people hear that buzzword and they think that, they can go get capital from family offices. But just a piece of advice that I have for everybody, and some of you may know this, someone does not. The family office space it's a circle of trust. It takes time to build it and nurture those relationships with those guys and girls. I mean, I've got one lady in particular that invests with me, and she has very deep pockets. She actually built an insurance company and sold it, and walked away very happy. And same thing in Palm Beach, and really in the Panhandle. I've done a lot of family offices that I've just taken 5 years or longer to build relationships with, and they don't all take that way. This lady that I just mentioned, she was an introduction to me through a mutual friend, and she invested in the first deal I pitched her. But it doesn't always happen that way. But one piece of advice that I have for people wanting to reach out to family offices, just know that in some cases it does take time, and to get those personal introductions as soon as you can, it's going to help warm both sides of the table up. Both sides open up and just really just have an open conversation. So people are reaching out to family office, they haven't realized that yet. It's just know that it's part of it. I have some that have yet to crack, but in time it'll happen. Because I'm in a different place now than I was when I first started. Because when you first start, you'll take any money that comes your way because you almost feel like you have to. But you get to a certain point, you feel like you can be more strict about the people that you bring in. Because one thing's, not all money is the same. I don't care what they say, because I have one investor in one of my deals. He's probably the most inexperienced, but he is the squeakiest wheel on the car. This guy is very, very annoying, but you deal with it and you make them happy. And no matter what you do, you're not going to make them all happy. But I think having one squeaky wheel out of the whole group of investors that we have, I don't think that's a bad thing. And he's only upset because we were paying out distributions each and every month for an entire year and a half before COVID happened. And when COVID happened, 99.8% of all the other syndicators in the market, they stalled distributions because everybody thought the sky was going to fall. Thankfully, it didn't happen that way, but even still, the property he's involved in, we still paid out 4 distributions last year, which I think is great considering. But he's jumping up and down, complaining and cussing that the lack of distributions has nothing to do with COVID. But I know it's only because he doesn't fully understand. So I'm not mad at the guy. But at the end of the day, it's like if I'd have known this about him before, I would have never taken his money.
Hey Ben, who was that guy? So we don't invest. We don't partner up with him.
Man, but I would say it's just as important. And I'll tell to a lot of equity shops, and I tell the guys that look, it's not just about the money. It's about the partnership, because you want to know the people that you get in bed with. You want to feel like there's some mutual understanding. The expectations are set. You just don't want someone to jump into a deal with you that has a different expectation, that really doesn't truly understand. And we have some first-time investors, and some of them have been nervous because they invested in a deal right before COVID, and COVID happened, and that deal hasn't. I think we paid out 1 distribution last year, but it's a really good property. I'm not nervous at all about it, but. This guy, he has a big construction company, got some money to put to work. He's nervous, so I'm having to, just keep him fed. But one thing that I would say is the biggest thing you can do, in my opinion, is to be consistent in your communication with investors, because even if there's a lack of distributions for any reason, like COVID, which is really, we can all say is an anomaly to the game, but it's real. As long as these guys and girls are comfortable and knowing that you're communicating with them, they are a lot more at peace in knowing that their money is safe with you, versus if you just don't communicate. And I have investors that are very well seasoned. Some of these guys have 7,000 units that I've passively invested with. They don't send me reports. I have not seen a distribution, but I know them well. I'm not worried about it, but it's only because I'm in the space, right? And the reason they don't do reports is because they have a lot of old dogs that have invested with them over the years, and they don't expect reports. They don't need the money. They know their money is safe with this guy. And so for me, I would just say that not everybody's like that. I would just assume that no one wants that treatment and that everybody wants communication, because just like in a marriage, I don't think you can over communicate when it comes to people's money.
I agree.
Mic drop.
But it's true.
Yeah.
Believe me. There's one thing I can tell you. It's like, please communicate.
I'm going to, so I just learned this last night on Clubhouse. So when I do this with my microphone, if you look at my little avatar here, when you do that, that's how you clap for someone on Clubhouse. I just learned that yesterday.
Oh, nice. Well, I'm a virgin on this thing. This is literally, I downloaded the app last night, and this is the first time I use it. I was actually asking Chirag earlier. I was like, what do I do? Am I on camera? Am I not on camera? What am I doing here?
Excuse me, Jorge, is because you guys have a little party emoji next to your head. That means you've been on the app for less than 10 days. I learned that.
So Daniel, I saw that you had hopped off and you hopped back on. I was going to ask you, what are you up to? I know you mentioned it. I think you said you have like 1,300 units right now. Where are you guys focused on? Daniel's trying to find his mute button.
I guess I'll just keep an eye out for you here too as you're getting started. Make sure, you've been pretty quiet here, it looks like, but like normally when I just want to make sure you know where the mute button is, because you'll see as you get in other groups, like if you're on stage, normally unless there's just one person speaking, you'll keep your mic muted. I don't know if you know what I'm talking about.
Oh man, I have to tell you guys, I love this platform. Like, this is the best. Listening to everybody talk, and I'm like, and Benjamin, I'm like, man, can you come talk on a podcast for me, Benjamin? I can just take some days off here. Yeah, right. You're busy talking to investors. I'm just saying, this is awesome. I'm having a lot of fun, guys. So I really appreciate everybody showing up. Just honestly, it's just a lot of fun for me.
Well, I'm happy to jump on a podcast. As a matter of fact, I don't know if you know or not, but I launched a podcast last year. I think it was in August or October. I've done, I don't know, maybe 4 or 5 episodes. I did it I needed to launch it, but it is something that I want to push very heavy this year. The whole premise of my podcast is it's the cold, hard truths of what it takes to own and operate multifamily properties, because I'm sure that you've all seen, there's guys out there that have bought 100 units that think they deserve to create a multifamily course and teach others how to buy 100 units. But what people don't realize is you can teach anybody to buy a piece of property, but you can't teach them how to operate it in a weekend. And that's when the real work starts. The real work starts when you close. Then what do? Nobody wants to talk about that. And then, people also see, when you raise equity, and I mentioned earlier that, we've raised $70 million from friends and family, and this is smaller check writers from $50,000, $100,000, $200,000 people that, it's a lot of work. It's easy to look at that number and say, oh man, that's a great achievement, but it's not really an achievement, it's an obligation. Because once you get money from somebody, now you got to put it to work. You have to accomplish what you promised that you're going to accomplish. So that's the whole point of our podcast, is just really just teaching people, like, this is the reality. You don't have to like the reality, but this is the reality. You need to stay away from these weekend courses. They're not all cut out the same. I know there's some really good ones out there, but I'm just saying that there's literally, I've seen one in particular. I'm not going to mention the name. The person's bought like 100, 200 units, and they want to create a course and sell you a $2,500 package on talking to them on the phone. I'm like, look, maybe I'll start a course.
Benjamin, and you mentioned that about the podcast too. This is one thing that I'm also learning about Clubhouse is Instagram is going to become much more of a business acceptable platform if it's not already, because when you make connections here on Clubhouse, most people, when they say shoot me a DM, they mean message me on Instagram. And I noticed you don't have your Instagram connected to your, I don't know if that's intentional, if you're going to switch it up.
It's a Benjamin thing.
It definitely will. And so, I'm very involved I'm probably the most involved on LinkedIn, but LinkedIn, Facebook, Twitter, Instagram, I guess some of these social platforms with some of this censoring stuff going on, it's kind of a love and hate relationship. But at the end of the day, it's like, I think we probably all use it for business purposes. So it's like, we just continue using it for our purposes. And so I'm heavily involved in all the platforms. So, if anybody's looking for me, you can always reach out to me there. My number, my phone number, my cell number, email is very accessible. It's on every platform, so you shouldn't have a problem reaching out to me and getting in touch with me. But if anybody on here wants to hop on a podcast interview with me at some time, I'm always open to that. We'll have a good time.
Excellent.
Is there a way that we can all connect easily, maybe via email or something? And then that way, it just makes it that much easier. And I know, I can't remember who it was that was talking about the DMing or something, but I'm one of those that, pretty much stays off social media. So, this is a great platform. I just learned about this, but other than that, I really don't use too much.
Yeah, definitely. I can connect the folks here. I mean, it's small enough groups, so it should be pretty easy.
Yeah, I'm just going to follow everyone in here right now.
Way to get that set up. Also, just so you guys know, we are going to be hosting a lot more of these too. And right now it's just once every Thursday, but realistically, I think there's just so many different topics and we have so many different types of authors just in the network that, I think we can probably do this even more frequently. It's such an easy way to connect with folks since we can't do any in-person events. We used to do that a lot more before. I know John and Jorge both had a chance to attend some of our in-person events that we were doing. And so I think now is this is the easiest way to do it. I mean, literally, I think we can all just literally be in our pajamas and connect with people that normally we wouldn't be able to meet.
Definitely. I just heard a story, Chirag, of someone who, they're in the Airbnb business, but they reached out to basically, you could say, someone in a different time zone around the world to run a 24-hour room. and they just like basically in advance they set up, okay, you know, if you're in this time zone, you're going to be the moderator for these hours, and then they hired 2 or 3 VAs for each time zone as well. And they just had this huge, like, 24-hour around the world Airbnb conference where the VAs were taking notes. It's just like, what? All right, so like anything can be done with Clubhouse, and yeah, I just want to drop that nugget.
Oh, totally. I've actually been involved in a few of these discussions. I literally have Clubhouse playing in the background. I just got the updated iPhone report of how often I'm spending time on like all the social media platforms. I think ever since COVID happened, I've been on my phone for like 10 hours a day. It's so bad. And literally now it's like 13, 14 hours a day. And I think I got the report that this week I was averaging about 4 to 5 hours on Clubhouse, not realizing that it's just playing in the background while I'm working. And I'm like, how the hell am I spending this much time on this platform? I don't like it. Just time moves so fast because you get to connect with so many people. You get to learn so much content too, just like listening in, just like, you know, being a fly on the wall. And I think I was just on a conversation where I think they had Mark Cuban and a couple of the other sharks from Shark Tank. It's literally just like a coffee, like you're literally at the dinner table with them. Like that's what it feels like when you're on this platform.
And there's no politics. I've learned I turn off the news in the morning now, and I turn this on, and I listen to the agents. The agents have a really good network that they've built, and it's really good to learn about, you know, from the investment side. If you're listening to how the agents are approaching the buyers, and you know, you really get to understand aspects of the business that if you're not deep in it, you just entrench yourself into that community by just staying a fly on the wall. It's really great.
Yeah. You mentioned that you had like a database or a network or something like that you're building out.
Yeah, so we're partners with Enriched Data. Enriched Data is newly part of the Moody's Reis network. And so they've quietly over the last 8 years built this database of 23 million property records, which is now seen as, you know, one of the top 3, probably the largest real estate database out there. And so they're my partner in 3 different companies that we've launched in. And we have a really strategic relationship with them. So I'm up all hours of the day working with their team in India and all kinds of ways to approach data in the sector. Yeah, it's been really great. Yeah. First 15 years of my real estate career working in Latin America, and you know, I worked with the wealthiest of the wealthy, helping them make more money, and I found this opportunity to create a platform where you can provide the average Joe who's trying to make a good living for his family, help them gain access to data to do something better. And that's really our mission.
Yeah, no, that's great. You know, I mentioned my podcast earlier, and, you know, obviously we try to talk about different topics. Same thing that Adam and his team do with Mission Matters, you know, have different topics they like to explore. But, you know, one thing is, you know, people that are new to the space, people like John that, you know, have access to capital, they have some experience, but, you know, they don't have, you know, a large network of, you know, I guess deal flow. You know, it's good to, I like talking about those things because, you know, I have my own strategies that we use, and, you know, I'm sure that you guys have strategies that you use. There's many different methods and means of accomplishing the same thing. You know, it's just, in that case, just putting a lot of irons in the fire.
Right. And another thing, and really, it's amazing that what you learn when you just sit in these clubhouse panels and just listen. And it's you know, it all comes down to being knowledgeable, right? And especially in the commercial sector, the data is so protected that you have to really get in deep to know what you're doing, and it makes it so hard for John Smith, MD, to buy a second building as an investment because he it's very easy when you're owner occupied, right? Right. And so one of the purposes of what we're doing with this subscription-based platform is by providing a quarterly update on a range of value, we're collecting from our clients their P&Ls, their expense reports, and their rent rolls. And there's no collector of that information in mass in the sector right now because, you know, you got the brokers who are getting that at the time of transaction. You have the management companies that keep it in silos, and that's it, right? And so our goal is to essentially create a Smith Travel research of commercial assets, but with detail that Smith Travel does. And just from in our valuation practice, this year we will do appraisal on over 6,000-7,000 property for property tax appeal. and where specifically hotels are a big boom for us. We've signed over 1,500. Our client, who's the biggest tax appeal consultant in the U.S., has signed to over 1,500 hotels. Now we have the actual P&Ls and expense reports for every single one of those hotels across the U.S., and that's just going to keep growing. So we're going to be able to get detail to how to manage a business, a real estate business better for everyone to be able to access it, not just institutional investors, because institutional investors are just 7 million out of the 23 million properties.
Thanks for sharing that, Ben. Real quick, I want to introduce Jennifer Chen. She just joined just a moment ago. She's actually one of our authors also in our real estate book. Firstly, thank you for adding diversity to this group and being the only female. So appreciate that. And then secondly, Jennifer's actually been involved in real estate for some time. In fact, she's got an amazing property that when I say property, it's, I'll let her kind of elaborate on it, but she's raising some substantial capital, and it's a prime, beautiful location in Hollywood. Jen, why don't you feel free to introduce yourself to the group?
Hi, it's been a long day today, so I just stepped into the room a little later. So yeah, we are developers in LA, and we're recently having a project in Hollywood that's only 1 block away from the Walk of Fame, and we're currently raising LP equity for construction of the project. We've been spent 3.5 years for the land development, entitlement and building permit, and finally Hollywood is just tough, but the time is there, and then yeah, that's it.
Wish you well. Mm-hmm. I don't know that much about California other than people are fleeing. That's the only thing I love the weather though.
Yeah, California, I mean, especially San Francisco, a lot of people are leaving San Francisco. I heard my friend over there is kind of he owns a couple houses over there, and he's like, oh, we were leasing out the houses to people co-living kind of style, but right now it's empty.
Yeah.
You mentioned earlier, and I definitely agree with it, is after a year, you get into the multifamily space and, you buy your first property, whatever. I've done, like I said, the 3 that I've done already, I wouldn't even think of holding a class, trying to teach others, because I'm still learning myself.
Yeah.
I'll give you an example. How do you teach when you have a fire that guts a couple of units, right? Mm-hmm. Then you got to deal with the insurance company. And then the people that were renting there, you have to give them, space for them to live. So there's so much besides the blue sky scenarios, I could do the underwriting, close the deal, work with the property management company to get the reports. But there's always, I call it the non-blue sky. What happens, one of those serious things, you need to have a good operations manual. You need to develop one, Actually, that's a good question I have for you. Do you have those types of procedures and, when you've acquired so many units and things like that, I know that should be probably the property management, but I imagine a lot of the GP would want to do something like that.
Yeah, no, that's a great question. And so we are actually currently building out our operations manual. We just, in building out to where we are today, right at 3,000 units, it's like building out a business plan, right? Arguably you don't need a business plan to start a company. You can just, you commit first and you figure the rest out later kind of thing.
Right.
Not everybody has that personality type, but, I realize that. Some people are more analytical, but, I don't think that if you have an operations manual built out first, you're not wrong for that. I just think for us, we're to the size now to where, it's almost like when you're an entrepreneurial company and you're just starting out, you don't go out and hire an MBA, because that MBA is not going to make your business increase. That MBA is there to work within the frame that you give them to keep the operation running so that you as an entrepreneur can continue building and scaling out the operation. An MBA is not going to do that. So we're at the position now to where a manual does make sense, because now we have, close to 30 employees that we really need one, because, not everybody is like me. And, I learned a while back that, don't expect to hire someone and that person be able to operate at 100% of your capacity. If they operate at 80%, then they're a good hire. And I think that those manuals just kind of help keep people on track. So when they run into situations like a fire, what do you do? You contact, insurance, then you have to get remediation experts in there. There's multiple, Service Master, and there's Paul Davis, and there's a bunch of other ones. out there that will come in, clean up, and then, really oversee the reconstruction aspect, and then, putting people up in housing, while they're being displaced. And, not many people know what to do. They just sit back and wait for someone else to show up and tell them what to do. But those manuals help, provide that guide. So we're actually developing ours out right now, but it's not completed.
And I imagine it's going to be like a work of, it's going to be always an ongoing work because you always have new experiences that you never come across. That's why I would never even think, if I was arrogant enough to think I could teach others after a year.
I was reluctant on even starting the podcast, but, I was like, man, there's so many people out there that are just misleading others, that teaching them how to buy, but that's it. Then what? That's when the real work starts, is once you buy a property. So that's one of the main motivators for me to even start that podcast, is just to provide a different angle that's not being talked about.
Hey, Ben, can you elaborate on that if you don't mind?
Oh, what?
On, you said all those podcasts out there that are teaching people how to buy. You obviously know that. I got into this last year, and my goal was to invest as an LP, and then I was a GP, and I'm in the same boat. I have no desire to do it on my own because of all those different variables, But you're right; they make it seem easy out there. Hey, just underwrite, find a good deal, and buy it. But you know what I mean?
That's when the real work starts, when you actually close. When you're at the closing table, and depending on your deal, if you maybe get some kind of acquisition fee, baked into it, you see your bank account go up for the day, but then what? The party's over. The real, now it's time for you to roll your sleeves up and get to work. But nobody's talking about that. And what I was alluding to earlier, I think you had fallen off or something, but it's easy to teach someone how to buy a piece of property. I can sit you down, let you read my ebook, and charge you $5,000 for it, but that doesn't teach you how to operate it. The operating manual, kind of to John's point, the operating manual will be a little bit more robust, a little bit more in depth. Probably be boring to some people, but it's just the reality of what you're faced with once you actually close. Because I think people chase the deal themselves because there's a lot of fee-heavy sponsors in the market that they're really just driven by closing deals so they can collect fees. And I think those are going to be some of the first ones that go belly up, if the pandemic were to linger around longer than what we all hope that it will. But that's where the real work starts. It's when you close. So that was the main motivator for me to start my podcast, is I just want people to realize that there's a whole different side of this game besides just closing on real estate. Yeah, it's all fine and dandy. People hear that, I have 3,000 units, and, compared to some others, that's really still peanuts. But, I smile at them and I just say, look, it's a lot of work, man. It sounds nice, and it is nice. Right. It provide a good life for you and your family. But at the end of the day, it's a lot of work. And, you can't just buy these properties and expect to sit back and go, I'm just a nut when it comes to this stuff, man. I eat, breathe, and sleep this industry. I'm passionate about it. I've always been passionate about it. Matter of fact, up until 2 years ago, I was renting a 3-bedroom apartment from one of my competitors just because I wanted to keep a finger on the pulse of the industry to know where my competitors were going, what concessions they were offering, what features they were offering, what kind of community events and stuff. So it wasn't until recently that I was renting an apartment. Not everybody would be that drastic, but that's just how crazy I've been about the industry. It's like I want to know everything about it, And John mentioned earlier, it's like here I am. I've been I started my career from the ground up 19 years ago, like literally from the ground up. I don't know if many of you know, but I started my career as a landscape architect in the multifamily space, and it just kept building from there. And from there to project management for exterior projects, then interior projects, then took a short stint on the brokerage side. That I just did it just to stay in the business, because this was back in 2008, 2009 when the economy went down. So I just played in that game just to stay entrenched in the space. And then when I was there, I was introduced to a guy named Greg Cardone that I didn't know who this guy was, but I went and interviewed with him, offered me a job. I ran his real estate company, turned it from Cardone Acquisitions into Cardone Capital. And, they've gone to, do great things, but I left because they didn't transpire the way that it was promised to me. So I left, started my shop, and here I am today. So, I have a well-rounded background, but, I've just always made myself a student. So even today, I'm like, I think about it, it's like, who am I to teach somebody how to do this? Because I haven't yet figured it all out. But I think that having that mentality is going to make you into somewhat of a genius one day, because once you believe that you've made it, quote unquote, that's when you start falling backwards.
Yeah.
So always be a student. Always. Podcasts, books. I still read books, listen to podcasts. Now Clubhouse is out. I can really see a lot of the application here with just jumping into, just different real estate related rooms and just being a fly on the wall. I mean, you have to, to talk. I mean, I heard something a long time ago that God gave you 2 ears and 1 mouth for you to listen twice as much as you talk. I like to talk, but I also like to listen because, I'm an education junkie. I want to know. I want to learn. I want to get better and better and better. And I think that everybody else on here probably feels the same way. Otherwise, you wouldn't be here.
Benjamin, I think I'm trying to remember a couple of years ago in Jersey. It was in New Jersey. There was like a big conference there, 10 times success or something. Were you there?
So was it Grant's 10X conference?
Yes.
Yeah. So that was that was a while ago.
Yeah, it was a couple of years ago, 2018, something. That's why you're very familiar now when you said that. I'm like, wait a minute, that's that guy. I remember.
I'm probably crazier than Grant.
That's a lot.
Yeah. No, I'm not that extreme. He's a unique guy. I have nothing bad to say about him, but I will say he eats, breathes, and sleeps everything he talks about. I will say that about the guy.
Hey, Ben, were you renting from Grant's place or no?
No, I was actually renting a place called Aspen, Wind Chase Village, I think it was called, in Aspen Grove. It's a neighborhood in Nashville, garden-style community, but no, it wasn't one of Grant's. But that's actually how I met Grant, is when I took a short stint at Marks & Millichap, I came across these, you're dialing for dollars, right? You're trying to find listings. And, like I mentioned, it wasn't my cup of tea. I was just trying to meet somebody, man. I wanted to come work for somebody at the time. I had just gotten married. My wife and I just had our first child. And, I called on Grant. I was going to call and try to, saw that he just bought this portfolio less than a year prior to that. And I said, let's see if the guy wants to sell. So I called him up. The secretary answered the phone and I told her who I was, what I was calling for. And she said, are you calling about the properties or are you calling about the job? And I said, well, I'm actually calling about both. Tell me more. And, they sent me over to this girl named Katie, who was his executive assistant. So she told me about the job. I had to send in like a little 20-second video. He called me in for an interview. I went down to Miami, with a newborn in my arm. And, 2 interviews later, he offered me the job. So, yeah, I learned a lot from Grant. Also learned a lot of things not to say. Because one of his things is he didn't believe in buying places in like Orlando or Atlanta because in his mind there was too much land for expansion. But I was always arguing with him, but because I would tell him, like, look, Greystar or Blackstone, they can't be wrong because they're buying up in the market and they're continuing to expand, so they can't be idiots. What are we missing? And now you see him buying in those same markets now. So they just shifted from Class B to Class A stuff after I left. But I helped them start Cardone Capital, and that was helped them kick off that fund. We bought 3 deals, and after that it was time to go. But they've continued to do well. I'm in communication with them, but I don't talk to them like not every week thing.
Hey, quick question, Ben. So you obviously worked there in you ran his portfolio, and I looked at some of his deals, and the reason they weren't very appealing to me, but he's getting a lot of investors. I mean, he's only paying 5-6% on a monthly preferred.
Oh man!
How is he getting so much business?
People,
when you know what I'm talking about.
People investing in Grant, they're not just investing in properties. And you got to understand, a lot of these people, he targets a lot of the people that have their money in the bank that may be making a point and a half, certainly less than 2% of their money a year. It's better to put it into, making 5 or 6% because after all, it's triple what they're making now. So that's what they're getting, but they're buying, Class A stuff. And quite honestly, these people aren't going to see their big bang for years when you get to the point of exiting. And, you know, for me personally, you know, it's really hard for me to look at that and be okay, but it just comes down to every investor being different. Some guys are okay with 5 or 6%. Some institutions, they go out and buy deals, they're okay with 13, 14% IRRs, but, you know, they're the ones that are helping to compress cap rates even further in the marketplace. But, you know, here we are, we're still finding the 18, 20, 21% IRR deals. I just closed one in November. It's throwing off 11% cash on cash in Daytona Beach. 3 minutes from one of my other properties that I already have in Daytona Beach that sits on the water. And that property, I mean, it was just under a 6 cap in a 5.5 cap market. You know, it was just a relationship. And I know that Ben was talking about, you know, the networks. One of the things that I built my strategy on early on was I built out relationships with brokers because I wanted the reputation of closing deals. And I wanted a reputation that we don't retrade. If we get a deal under contract, it's because I've done a lot of due diligence on it, and I feel very comfortable at the price that I offered. So comfortable that I don't retrade unless it's absolutely necessary, and that's only if I miss something. And so as such, we get a lot of deal flow from a lot of credible groups, and it just so happens that I probably bought 10 or 12 properties from Cushman & Wakefield, and you know, if you focus on that strategy, now I have Cushman & Wakefield around the country, because they have weekly calls and they always hear my name on these calls because, you know, we've closed so many deals with these guys that, you know, we get a lot of off-market deal flow. And that's how I got that deal in Daytona Beach that I just mentioned. It was off-market. Broker brought it to me. I wasn't interested in it. They awarded it to somebody else. They couldn't close because that was right when COVID hit. And now all of a sudden the lender wants you to, you know, escrow in $1.2 million. And if you don't have that factored into your underwriting, it can really throw your numbers off. And so a couple months later, they brought it to me in the middle of COVID, and, you know, we locked it up and, you know, ended up buying a 6 cap deal in a market that we're already heavily involved in. And it was, I mean, really the extent of our renovation on that deal, because the seller really did a lot. The entire property, the extent of our renovation is nothing more than adding backsplash, resurfacing the countertops, only because the cabinets are white and the countertop is like a cream. So there really is, and the appliances are white, so there really is no contrast. It's very bland. So we're adding the backsplash, doing the countertops, and putting vinyl flooring throughout with carpet in the bedrooms. That's the extent only. And we're getting $150, $175 premiums on that. Those deals are still out there. And that deal, that was I think it was a 22 or 23% IRR on that deal. You know, so that was a recent deal. And those things are still in the market. Like this Jacksonville deal that we have in the contract right now, it's like a 19.5% IRR. But, you know, they're still out there. I mean, some of these guys are okay with these 12 and 13%. You know, they can have them. You know, we're still getting, you know, what we're accustomed to. And as long as we can still find those, we'll keep buying them.
What does that deal look like in Dallas that you're working on?
That deal in Dallas is on the north side of Dallas. It's in a really good little gentrifying pocket. 233 units, I think it is, if I remember correctly. It's been maybe 30% renovated. All the exteriors have been done. It looks like a little, what I call Austinizing a property, which, you know, you have your little pops of color, like on the doors, that you have like divider walls that are like this nice teak wood shiplap with like this funky, you know, painting on the side of the building. It looks, you know, very boutique kind of property, which is really trending. And I think it probably started in Austin and then went to Nashville. And then, you know, you're starting to see other markets around the country do the same thing on smaller property. You know, you have to compete with some of the bigger players in the marketplace. And even though this deal was roughly 232 units or 233 units, you know, it's mid-70s construction, but, you know, you're up against Class A and nicer Class B properties that are, you know, more amenitized. You know, you have to be creative. And I think that's very true, especially in your deals that are like 50 units and lower, because you don't really have any amenities. I really think you have to focus on putting some really unique features on the interior and really just the unexpected. Like, you know, we put USB plug outlets into every unit that we
that we turn. It costs $20 to do that, but with everybody having cell phones and people losing their plugs, it makes sense to have these USB plugs. And if nothing more, it's worth the marketing angle, even if tenants don't really get into it.
Yeah, I love Dallas, man. Dallas is hot, man. It's a great place to be, man.
Yeah, I've been wanting to be in Texas for quite some time.
Yeah, man. I love Texas.
Yeah, we're excited. I mean, I'm flying out there in the morning at 8:15 and get back home at 9 o'clock tomorrow night.
Yeah, cool. Listen, when you get that information out of Dallas, you'll send it over, man.
Yeah, I'll let you know. I really like it. I mean, I'm bullish on Texas. And I do have exes that live there too. Familiar with the George Strait song? All my exes live in Texas. At least 2 of mine live there.
Thanks for setting up. Really appreciate it, man. I love it, man. So,
Chirag, thank you very much.
Yep. Thank you.
Yep.
Great. Yeah.
Absolutely.
Nice to meet you all.
Yep. Pleasure.
Likewise. Everybody's been a pleasure.
Yep. Likewise. Cool. Appreciate it, guys. Thanks again. It was fun. Thanks, everyone.